Welcome to the market update for May 1st, 2025. I'm Ricky Walters, certified mortgage advisor.
He's the mortgage wise guy, wise guy.
In a normal market, inflation is the biggest driver of the direction of mortgage rates. Yesterday, we got the Fed's favorite measure of inflation, which showed the rate of inflation declining from 2.96% to 2.65% annually, which should normally cause mortgage rates to decline. And just the week before, we got both consumer price index and producer price index measuring retail and wholesale inflation, showing the same thing, progress on lower inflation numbers. Add to that the price of crude oil, which affects the price of everything that we buy in our market, since the beginning of the year has declined over 20%. You can see that here at the end of this graph. And the last time we were this low, it was as we were coming out of the recession from COVID. Anyway, why haven't the price of gas at the pump come lower yet? I'm sure you're asking that question. Everyone is. Well, it is around the country, but here in California, the higher cost of crude already in stock, that has to get sold. And the other lame excuse we're getting is refineries have to change the winter mix to summer mix. But you heard it here first. I believe you're going to see in the next 30 to 60 days in the Bay Area, the price of a gallon of gas drop below $4 a gallon, especially at the better priced gas stations. Okay, so that should be bringing down the interest rates, right? That should be, but the boogeyman tariffs that the media is always telling us about right now is to blame, correct? Well, how was the economy doing just before the announcement for all these tariffs that we're experiencing? Well, let's take a look. The Conference Board, which measures consumer expectations, said the expectations for the future has fallen to a 12-year low, and that was before, back in March, before the tariffs came into the news, dropped to 65.2, lowest level in 12 years, well below the threshold of 80 that usually signals a recession. And earlier this week, we got the April report, and it dropped even further to 54.4, lowest level since October 2011 as we were coming out of the Great Recession. So, what happens if we do go into a recession? Is that good or bad? Well, we're going to talk about that in a second afterwards, after I tell you about the GDP, which came out yesterday, and that was negative GDP for the first time in 3 years. Classically, a recession is defined as two consecutive quarters of negative GDP growth. As I was getting ready to say, in recessions, each of these shaded areas indicates a recession going back over 50 years. We've seen mortgage rates decline each and every single time, which helps affordability for buyers looking to buy homes. Well, what about those same buyers concerned about going through a recession and their property values declining? Well, you might be happy to know that going back even longer, 60 years this time, every recession that we've gone through, except the Great Recession in 07, 08, we've actually seen home values improve and increase. The reason 07, 08 was the outlier was because we had four times the inventory and we had loans like stated income, stated asset, 100% financing, negative amortization, pay option arms. All of those loans have been regulated out and not even offered anymore in the mortgage industry. So, what do we tell your buyers when they're a little concerned about going into a recession and what's going on in the economy? Tell them to marry the home, date the rate, and divorce the landlord. This is Ricky Walters, your mortgage wise guy.
He's the mortgage wise guy, wise guy.